Welcome, everyone, and thanks for joining today. My name is Samantha Azzarello, and I'm a Global Market Strategist at JP Morgan Asset Management. We're here to talk about what's going on in the markets and what you need to know. So, obviously, there's a lot happening right now with COVID. Now, why this is really interesting for markets and very, very volatile is because COVID and everything that's happening is both a demand and a supply shock. And if you think back to macroeconomic textbook, that's pretty rare. Normally we get one or we get the other. So what we're seeing right now is both. On the supply side, we've seen factories shut down, businesses close up for a little bit, and that's stopping the flow of goods. On the demand side, we're seeing people being forced to stay in place, right? Spending less and lost wages. So this is obviously a very big shock, and we've seen markets react accordingly. Now, what do we need to see for markets to start to calm down? In our view, we need to see a few things. The first is that this spread rate of COVID in the rest of the world, right, excluding China, needs to start to stabilize and then fall. Also, we need to see fiscal stimulus. We need to see governments step up around the globe and spend money to support businesses, small businesses in particular, and individuals. I am happy to report that we've seen that in various countries. Right, Canada's passed some fiscal stimulus, as has the U.S., and we're going to see more. Now, even though we know we're going to get a sharp decline, right, a very sharp decline in economic activity in the second quarter, this is not going to last forever, and we are going to get through this. What the equity market is pricing in is a lot of uncertainty, right? The equity market's always forward-looking. It's always trying to figure things out. The amount of volatility we've seen in the equity market is representative of the fact that there's a lot of uncertainty. So this will subside, but we're just going to need to see that spread rate come down, and we're going to need to see more fiscal stimulus from governments. Now, what's happening on the monetary side, whether it be the Bank of Canada or the Federal Reserve or the Bank of England, we've seen central banks around the globe bring rates back down, cut rates. Now, this is important because this is providing stability for financial markets. And this is something that's also been a big positive. All of these things that are happening, whether it be the fiscal stimulus or the central banks taking action, it's going to take time for this to flow through to markets and calm markets down, but that will happen. Now, what should we be doing right here, right now? I would say we have to keep perspective, stick to the investment plan we had set out with. Right, we might be doing a bit of tweaking around the edges. However, we want to stay invested because we know, right, with the data on our side, all the history on our side, the market has rewarded us for staying invested over the long run. And nothing about that has changed right now. This is a volatile period, but we need to keep in mind that staying invested is still the main way that we convert income to wealth, and that all of this market volatility, right, all of this economic uncertainty will subside. It's just going to take time, and we need to be patient. I hope this was helpful. Again, my name is Samantha Azzarello, and I'm a Global Market Strategist with JP Morgan Asset Management.